नमस्कार साथियों, और आज आप लोगों के साथ डिस्कस करेंगे गोल्डमैन सैक्स raised रिलायंस इंडस्ट्रीज शेयर प्राइस टारगेट ahead of Q3 result next week. Here's why. Goldman Sachs has raised its 12-month price target on Reliance Industries to reach 1,835 a shares, implying an upside of about 20% from current level. Exactly a week ahead of the company December quarter Q3 financial year 26 earning, the brokerage has reiterated its busy ratings, arguing that near-term moderation in retail will be offset by improving refining fundamental and steady momentums in telecom, keeping Reliance medium-term earning trajectory intact. In a note that January 9, Goldman Sachs said it has refreshed its estimate for Reliance by marking assumptions to improving trend across segments like for like, which pair the brokerage expert Q3 earning growth in retail to moderate due to weak discretionary spending based effects and festive timing. However, this is likely to be partly offset by a strong refining lead performance in the oil to chemical O2C business. As a result, overall earnings remain largely unchanged despite tweaks at the segment level. Reliance Industries stock price has corrected about 8% in the last couple of trading sessions after outperforming the Sensex, Nifty and pairs over the past year. The international brokers attribute the recent public pullback to investor concern around Reliance exposure to Russian crude and softer retail growth momentum, but analysts believe these worries are overdone and see limited impact on the company's medium-term earning profile. Here, what the brokerage is saying about refining the remain the key pillar. Goldman Sachs analysts expected O2C, EBITDA and Q3 financial year 2026 raised 11% quarter-on-quarter and 16% year-on-year, driven by stronger refining earnings that more than offset a sequential decline in the petrochemical. Refining the crack improved during the quarter, and permanent refinery closure, unplanned outage and distribution to Russian product export targeting global product market, lower Dubai Brent spares and easing Saudi crude premium have also improved the cost Q positional for the complex Asian refiner, Suzy Reliance helping sustain strong margin even as Russian crowd exposure has reduced to about 33% of the import mix in Q3 from 52% in Q2.